Today is maximum practical, a real Olymp Trade screencast. Trade closes in profit plus $. Result: the trade closes in a loss. In my series plan, I cover that amount with my next entry, but the impulse doesn't hold. Price turns down and the trade closes in a loss. Series result: total balance $. Hey, I'm Ravi Kumar. I used to be a software engineer in Bangalore, and life taught me something pretty fast. What matters most isn't talent, is staying clear-headed when things don't go to the plan. In trading, that rule is even harsher. The market doesn't break the weak. It breaks the people who lose themselves in the moment and start acting on the emotion. Today is maximum practical, a real Olymp Trade screencast. We will break down a series of GBPUSD trades on the 1-minute time frame, profits, losses, and most importantly, how to behave so loss doesn't turn into tilt. If you like this approach, no acting, real entry logic, and honest mistake breakdown, subscribe, hit like, and check my Telegram link in the description. I share checklists and a journal template to make trading calmer and more consistent. Let's go to the screen. Alright, we are on the Olymp Trade platform. Chart type is candlestick because on the 1-minute chart, candles show the one thing that matters most, the price reaction right now. I open the asset list, choose GBPUSD. We see a 91% payout or solid return, which makes the series math more stable. Now I set the time frame to 1 minute. The 1 minute time chart is pure discipline. Either you wait for the confirmation, enter by the rules, or you start the guessing and you pay for it with your account. Let's start. Trade number 1. First trade will be $40. I enter down. I won't overload this theory right now. In a screencast, we show the action and the result. I have entered, so I don't mess with it. I don't flip my decision every 5 seconds. Waiting. Trade closes in profit plus $36.4. We log it and move on. Trade number 2. Second trade, I increased to $70 and again I trade the price reaction. I entered down and here is why. Price hit a local high and upward move starts losing speed. On the candle we see the body shrinks and upper wick appears. Classic early signs of a potential pullback. An upper wick here means something simple. Buying tried to push higher, but selling stepped in at the top and piece doesn't hold. It's not a grunty drop, but it's a clear message. Upside momentum is weakening and the pullback probability is rising. That's why I entered down with $70. Trade is coming to close and it closes in profit plus $63.7. 2 trades, 2 wins, and this is where many people lose control and start increasing risk emotionally, and I don't do it. I keep watching the market, not my confidence. So let's start trade number 3. Third trade, I raised to $90 and enter up. At the moment of entry, the market really did look like it could continue upward. Candles were forming confidently without sharp pullbacks, and visually the impulse seemed likely to be hold. But the market isn't seems. The market is facts. Right after entry, price runs into resistance. Buyers can't extend the move. Things slow down and the impulse doesn't get continuation. Result: the trade closes in a loss. It's okay. This is where you get tested. A loss is normal. The question isn't where you take a loss. The question is what you do next. In my series plan, I cover that amount with my next entry. But only if I see a clean setup with real logic. No just get it back, no revenge. I recover the amount and enter down. Waiting. Trade closes in profit plus $81.9. Loss covered, control intact, and moving on. Trade number 4. Now I increase to $150 and enter down again. Watch the market. Price turns from logic resistance and the reaction shows sellers are taking control. Where buyers are pulling price up before. Now the move looks heavy and the market isn't being allowed higher. This is a spot where down entry is logical. Resistance hold and sellers are strengthening. The trade comes to the close and finishes green. Plus $136.5. Another win. Good. But now comes the part people hate. Another psychological test. Trade number 5. I increased to $200 and enter up. This in the moment logic seemed reasonable. It looked like the market might try to push higher again. But the impulse doesn't hold. Price turns down and the trade closes in a loss. Again, a loss isn't a tragedy. Tilt is. So I don't fight the market. I go back to what works. I look for a moment where the market clearly shows strength. By the plan, I recover $200. I enter up again, but this time not on hope, on clear confirmation. Trade number 6, I enter up. And here the picture is strong. The market prints a clean upward impulse. Buyers take control. Candles support the move without sharp pullbacks. That's the key. When an impulse is real, it doesn't look nervous. It looks composed. Candles push. Pullbacks stay short and weak. Waiting. Trade closes in a profit. Another plus $182. Series result, total balance plus $760.5. And here is the main takeaway from this screencast. The profit didn't come from everything always works. We had 2 losing trades. The profit came because after losses I stayed clear-headed and didn't turn trading into gambling. The market will always test you, but the one who wins is the one who stays clear-headed. Even under pressure, discipline is the real strategy and consistency is the true sign of skill. Remember one simple thing, profit feels good, but losses are part of the game. A pro isn't someone who never makes mistakes. A pro is someone who doesn't fall apart after a mistake. If you want, I will drop my short what to do after a loss checklist in my Telegram so you don't slip into tilt. Pause, check why you entered, filter by condition and only then decide. Link in the description, subscribe, hit like and I will see you in the next video. Olymp Trade Breakdown.